Your Central Florida home might show $470,000 on the real estate site, but your insurance policy shows it insured for $560,000. That's a $90,000 gap. If that's ever made you wonder whether you're overpaying for coverage you don't need, there's a real reason for that number, and understanding it could save you from a major financial problem down the road. In this video, we'll break down the difference between market value and replacement cost, and which one actually determines what your home should be insured for. Market value is what a buyer would pay for your home. That includes your land, your location, your neighborhood. Replacement cost is different. It's what it would actually cost to rebuild your home from the ground up if it were a total loss, including labor, materials, and debris removal if needed. Insurance doesn't cover your land. After a fire or a hurricane, your lot is still going to be there. This is where a lot of homeowners get confused, and it's why so many end up insuring based on market value instead of true rebuild cost. Those are two very different numbers, and basing your coverage on the wrong one can leave you seriously exposed, especially in a state where storms can do major damage overnight. There are 3 common situations that change what it actually costs to rebuild your home. The first is renovations. The second is a roof replacement, which matters even more here in Florida, since carriers pay close attention to your roof's age and condition. Both add new materials and new labor costs to a rebuild. If you've done either one and didn't update your carrier, your policy may not reflect what your home would cost to rebuild today. The third is rising material costs. Between Florida's stricter building codes for wind resistance and the demand on contractors after major storms, construction costs have climbed significantly in recent years. Your dwelling coverage may already be behind, not because anything changed at your house, but because the cost of rebuilding changed around it. Over time, these changes can quietly push your home's rebuild cost higher than what your policy actually covers. That gap is called being underinsured. And the scary part is, most homeowners don't find out until they're filing a claim. Here's an example. Say your Florida home would cost $550,000 to rebuild, but your policy only covers $385,000. That's a $165,000 gap that could come straight out of your pocket. In this case, your home is only insured for about 70% of its actual rebuild cost, below the common 80% threshold, which could lead to a coinsurance penalty. That's a whole topic on its own, so we'll save it for another video. That's exactly why our team is here. Give us a call or send us an email, and we'll look at your current policy and let you know if there's a gap between what you're covered for and what it would really cost to rebuild your home.